The bull market in precious metals continues to surge higher, with gold edging out its previous all-time high and silver gaining a whopping $1.90 today to close the New York market on Friday, May 17th, 2024. In this precious metals-centric gold market commentary, we'll go over the latest charts for gold and silver and remind you that we still have a great sovereign minted silver special that may not last that much longer. Let me share my screen. Gold and silver continue to surge higher after hitting major support 2 weeks ago, holding and rebounding sharply over the last 2 weeks. In this gold market commentary, we're going to look at gold's new record high. Silver has broken out sharply. We'll look at all the latest charts, discuss that silver bullion special that we have, and we'll talk a little bit at the very end about the U.S. economic data that shows the U.S. economy is weakening a bit. Here's the latest one-year chart for gold. As you can see, it's really strong. We had that mild correction over the last couple of weeks with gold hitting 2413 at that first peak on the left, the top right of the chart, coming right down to support at 2300, and it's bounced all the way back up to 2419 today for the July contract, setting a new record high by about $6. This market is just resilient and continues to surge higher without giving up very much at all. Looking at the candlesticks, this will reiterate it. We've got support on the candlesticks at 2290. You can see the previous candlestick high is still sticking up there at 2448. Today, we got a little over 2420 in the futures market and closed at 2419, which eclipsed the previous all-time high of 2413. And this market just remains relentlessly strong. So we'll continue to look at that 2300, 2290 level as a support level. And we'll see if we can get some follow-through trading next week that'll take the price of gold towards 2450. And 2500 is clearly back in sight again for gold. Let's look at silver. Silver has made a whopping gain today of almost $2, closing the New York session a little under the 3177 that we're seeing the June futures contract at. So this is a gigantic breakout for silver, over $30. It's the highest silver price we've seen since 2013, and it's a clear breakout, about as good as you can get for silver with a movement higher. We've been saying for months now, gold leads and silver lags, but when it plays catch up, it tends to play catch up with a vengeance, and this could be the start of that big move higher. Time will tell. Let's take a look at the candlestick chart. You can see the previous upside resistance for silver was at 2990 on that candlestick that goes back to mid-April. And then we corrected all the way back down to the previous high of 26.25. We've edged back higher. Just the last couple of trading sessions this week, silver had a big gain on Wednesday. It was a little bit sideways yesterday, Thursday, but today it made a decisive break higher. Trading is all as high as 3185 before consolidating a little bit lower. The New York close was about 31.25, but silver continued to gain in the electronic session, closing that for the June contract at 3177. So silver's made a big breakout, and it's starting to play catch up, as we told you it probably would, and it should, with gold continuing to set new highs. Now, looking at the gold to silver ratio chart, this move higher in gold has been nice, but this big surge higher in silver has pushed the ratio down about 4 points just in the last two trading sessions. So with gold at 2419 and silver at 3177, that brings the ratio down to 76-1, basically. So silver is playing catch up, and playing catch up very sharply today on a big move. Let's put this into perspective relative to the last 20 years and the big bull market that followed the great financial crisis of 2008. I hope you can see this all right on the screen. So this is a 20-year chart of gold and silver that are stacked and they're proportional. You can see back when gold hit 1900 in 2011, silver actually hit $48 a little bit before that, but it still held in the $40 range while gold was peaking at 1900. But what you really need to look at here is the slope of the gain for gold was sharp and gradual over a 4 or 5 year period, while silver went sideways and then sharply higher. Well, we're in a similar pattern right now, with gold hitting a COVID high of 2070 and silver punching up to 2940, but we've hardly been able to get over that $30 mark until just today in silver. Meanwhile, gold is up about 15% in the last couple of months, but now silver's starting to play catch up. So let's give you a little bit more perspective. You can see this is the previous all-time high in gold in 2011 with that red line at 1900. You can see how much over that gold already is. And if you look at the 20-year silver chart, that green line is a support and resistance line at 48, and silver substantially below that today, despite gold's big gains over the last 2 months. Putting this into percentage perspective, gold is 27% higher today than its 2011 high, while silver remains 33% lower than its 2 previous highs. You've got to remember when gold peaked in the 70s, it peaked at $850, and silver did get to $50 then. During the 2011 bull market, it got to a little over 48. So silver remains sharply lower than its all-time high, while gold is substantially above its previous 2011 high. So I hope this helps you see and put into perspective how silver is lagging, and today's breakout means that this market could really start to close that gap in the gold to silver ratio. It would take silver to get to $40 to get that ratio back into the high 60s, which is near the equilibrium point. That's why I raised my target for silver in our last video to $40 with gold over 2350. We continue to have a great special on the 2023 dated South African silver Krugerrand. As I mentioned in our last video, the South African Mint had a pile of these left over that were unsold, and one of our trading partners bought the entire position, and we've got a preferred deal on them, so we're offering them to you as low as $2.79 over spot. They're the best value today in a sovereign minted 1 ounce silver coin. We continue to love them. They may not last that longer. Sales have been pretty good, and we're slowly whittling our way down to the bottom of the pile. So please, if you're interested, these are a great deal, and don't dally. Meanwhile, we're continuing to see the U.S. economy ease as the data continues to come in. GDP for the first quarter of this year was 1.6% versus 3.4% at the end of last year. Just in the last 48 hours, the Conference Board's leading economic indicator plunged 0.6% in April. It was flat in March, and it has been down for 20 of the last 21 months. So the indication is that there's some serious headwinds for the U.S. economy going forward, and that's reinforced by retail sales, which came in flat for April after rising 0.6% in March. As we told you last time, jobs in April were 175,000, 50,000 below expectations. So the Fed's mandate for employment may mean that the Fed might actually cut rates more than once this year as this economy continues to weaken a bit. We did get inflation coming down just 0.1 of a point from 3.5%. in March to 3.4% on the CPI, which reinforces that Fed rate cut expectation for perhaps 2 rate cuts this year. But more worryingly for me is US consumers with credit cards and savings. We're seeing credit card debt continue to surge to a record high. Pre-pandemic, the savings rate in the US was about 4% on average. And with all that stimulus money from the government for the pandemic, that savings rate got up to 6%. And now we've spent it all. The savings rate today is below 2%. So we've got record high credit card balances and record low savings. Clearly, consumers have been spending what they can and getting money where they can to supplement their income for the bite that inflation has taken out of their purchasing power with their paychecks, even though paychecks have been rising, wages have been rising. And this is reinforced by the Federal Bank of New York, the Federal Reserve Bank of New York, coming out with a story just a few days ago that said household debt has risen by $184 billion in Q1, and delinquencies are increasing across the board for mortgage debt, home equity line of credit, just a little bit. Student loan debt, it's down. Well, we've forgiven a lot of that. We've got auto loan debt up. Credit card delinquencies are up. Other delinquencies are up. So this is a troubling sign. And remember, the US economy is 70% consumer driven. So if the consumer's meeting the end of their rope on what they have available and they slow down their spending, that could mean the US economy really is easing perhaps quite a bit more than we might realize in the coming months. And I do suspect that that's what may happen. So we are American Gold Exchange. We're a national physical precious metals mail order dealer out of Austin, Texas. If you like what we're doing, please subscribe to our channel and like this video. Again, I started this company 25 years ago, and we've earned the loyalty and trust of tens of thousands of clients over this time. And without you, our loyal customers, we don't have a business. So thank you again for the trust and the loyalty that you place in us. And that's it for our update today. Have a great week, and we'll see you next time.